Hey, folks. Welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Thursday, February 4th, 2010. Well, what a down day on Wall Street today, folks. On the back of fears of sovereign debt, jobless claims, you name it, it's out there. The market is worried about it. Now, again, could it have anything to do with the fact that the markets continue to be up about 70% off their lows last March? It could be. Just the fact that you have an overbought market. But any way you cut it, the dollar is screaming higher today. That's putting pressure on commodities. When commodities drop, commodity stocks like ExxonMobil and Chevron, which have direct links to the Dow, continue to fall. And again, that's a big issue here is when you have the dollar going up and the indexes are weighted so much towards commodities, it's going to make falls happen more and more the more the dollar rises. So again, take a look at the UUP today, folks. The UUP is soaring again today, up 13 cents on the dollar ETF. In addition, take a look at the USO today, getting crushed, absolutely demolished on the day, down $12.12 at the lows of the day, actually making new lows as we speak. There is some support here, which I want to show you on the 60-minute on this UUP chart, on the USO chart of double bottom characteristics going back a few days to last Friday's lows. So again, take a look at this, guys. Clear as a bell. You have actually double bottom support here. A very good solid level of support right around 35.50. Possible buying opportunity for a short-term bounce play here. Now again, I'm giving you a couple plays today because the markets are wild and because I want to show you what we can do here at In the Money Stocks, in the Research Center, in the Intraday Stock Chat. You may name it, we make money. Bottom line, folks, going back to the SPY, and let's talk about the SPY on the 60-minute chart now. You have some key things going on. All the way back to really late November with Dubai. Remember the sovereign debt issues with Dubai, the possibility of default? That continues to rear its ugly head. Greece was after them. Now we're talking about Spain. Now we're talking about this country, that country. All of Europe, the fear now with the euro getting pounded, is that the euro and the European Union is going to have to start printing money to rival the U.S. just to help their economy start to get back on its feet. It's looking more and more like they're going to do that. That's costing the euro a lot of kind of value here as it's dropping in comparison to the dollar. So the dollar is gaining strength, continues to gain strength as the markets are dropping like a rock. Now you might say, well, why isn't that good for the U.S.? If the dollar's rising, then everyone has, more buying power. Well, technically for the individual it is that has money as the dollar is increasing in value. However, it's not good for Wall Street. It's not good because you're seeing the commodities drop. I mean, not only is the USO dropping like a rock today, but take a look at the GLD. Gold is getting crushed, $50 plus to the downside on spot gold. The GLD, which is the big measure on the ETF front here, down $4.70. Look at this drop from this close yesterday all the way down here. You are coming into a little bit of support, but again, daily chart, we can see we punctured this little bit of support. Now really looks like you're now having gap window, then gap support on the daily as your next key levels of support on the GLD on the gold front as gold continues to plummet here. So again, let's go back to the GLD. We'll talk about some major levels on the 10-minute chart. As you can see, a gap down today, punished, continued selling. Really, we've stalled out on the selling here. You seem to have put in a little bit of a near-term bottom. The question is it going to hold? All right, and that's really the bottom line. As you can see, a low pivot right down here at 106.94. That actually is a key in the money stocks even number play that could be utilized and was utilized there at a break of the even number for a buy for a bounce back above. As we come down here again, you can see we're now going to hit this double bottom level. There should be some support. If you break this, though, folks, you're going even lower, all right? And we're going to have to see where this market closes. I really can't divulge the key supports on the daily chart where you're going to look for the next hit to be because that is premium member of the Research Center of the Intraday Stock Chat information. I just posted a new trade on the hot charts and alerts in the Research Center. If you want that, you have to log in. If you're a premium member, if not, sign up to the Research Center. You get everything listed under that Research Center. And again, I just posted a new trade that I am in specifically. And again, I repeat, I am in that trade specifically in the Research Center. I gave the price. I gave the stock. You have all the information if you want to follow a pro trader, chief market strategist at InTheMoneyStocks.com. As I always pretty much post all my trades in there to all the members, and I give them out in the Intraday Stock Chat live as well. Now, as this market continues to hold this 107, high 106 level, you have double bottom support. There should be some support. If we do fall through that, you're going to look at 106.75 as interim intraday support as next spot. But ultimately, you want to see where do we close today. This was a key gap fill. Believe it or not, this lower bluish white line was a key gap fill on the charts. We did hit that. We did get a bounce early, and then we punctured through it, came back up, recaptured it without confirmation. Notice here, a drop below that line. There was no confirmation because you reversed it. And then again here, you're now looking to to see if you get confirmation, which would take another breakdown. And so far, you see that double bottom working out to the upside in a beautiful manner. Stocks out there, some leading stocks are absolutely getting punished, folks. Goldman Sachs down $5.50. ExxonMobil, we talked about that, down $1.60. That's a big move down on ExxonMobil. JP Morgan down $1.41 here. The FAZ, which by the way, I still hold a third position of this as I've unloaded on this recent fall of about 7%. I've unloaded 2/3 of my position. I still hold 1/3. That is making me money today, up $1.65. In addition, SRS I still hold up 36 cents. And of course, I still hold all my QID here, which is up $1 on the day. So again, you can see how the maneuvering is. Believe it or not, I've been sitting mostly in cash since 2 days ago on the big rally. And since that point, I moved into a majority of cash, except for a couple of these short positions. And now I'm at the point where I can start to make decisions. Do I want to start getting back into some long plays for short-term swing trades, meaning maybe buying something at the close for a pop tomorrow, or buying something tomorrow for a pop on Monday, depending on how the charts are telling me what's going to happen. I already did pick up one thing, and again, that was posted in the Hot Charts alerts for the premium members there. All right, and again, keep in mind, folks, this market is a wild market. The sovereign debt issues are not going to go away. The question about tomorrow is the non-farm payrolls number. What are you going to see on the non-farm payrolls? Is the dollar going to weaken? If the dollar weakens, you should see a bounce in this market. It's all up to the dollar at this point. Remember, this sovereign debt issue is not a new issue. It's something that's been in line for many, many months now, going back all the way into November. So let's keep that in mind as we continue to analyze this market. Be aware of what the issues are. Now, jobless claims this morning were reported. Initial claims were not pretty. Why not pretty? Well, because you had 480,000 initial claims filed. Why is that negative? Well, because in December we were down into the low 400,000s. Now, I preached to my premium subscribers. I said to them, and I even said in these free videos, I said, guys, listen. The holidays are here. People are just not firing. I mean, think about it. Do you fire someone the week of Christmas? Chances are no. Will you fire them in early January, in mid-January, in late January? Yes. You have to get back to work. You have to do what you got to do. So is it surprising to me? No. I called this out. We had called for the correction. The correction is fully underway here. A beautiful correction at that, since the highs, as I nailed the exact high on this market on January 11th. That was the high of this market, and I nailed it, and I called for the short. Sure enough, this market has come on down 7-8% since those levels. Now, again, folks, just to remember, the jobless claims number is big, but tomorrow non-farm payrolls are even bigger. Watch that number. Join in the money stocks. Research Center is key there. Best value, unbelievable value in that Research Center. $49.99 a month. You get trades, you get guidance, you get unbelievable education, premium guidance that literally no one else is doing. We're giving out our secrets in there in the money stocks this play, in the money stocks that play, that again no one else is using. We'll see you there. I'll be releasing more plays this afternoon and tonight in the Research Center. Get on board now, folks. Take care.